What is the simplest way for ordinary people to invest? I recommend Index Fund ETF, which is also Buffett's most recommended way for ordinary people to invest. Hello, everyone. Here is Brown's Financial Management Watchtower. In the last 2 years, the fund market as a whole has been bleak, and people's trust in fund managers has begun to be greatly reduced. Many leading fund companies have begun to look for another way. The battlefield has turned to this ETF. Even many securities dealers have started an ETF contest. ETF may not be very familiar with many people, but it is actually very mature in the United States and deeply loved by Buffett. He even said that after his death, this company will no longer have to choose its own stocks and will directly buy ETFs in full. 90% bid for the P500 index, and the remaining 10% bought short-term US Treasury bonds. What exactly is this ETF? Is it that divine ETS exchange trade translated directly as a fund listed and traded on an exchange? I estimate that everyone may be confused after listening to it. His literal translation is that it can be traded directly on the exchange. In fact, in some countries, ETFs track an index, so you can simply understand it as an index fund. This is like something. Some people don't eat vitamins, such as VC, B6, B10, which is very troublesome. Now you don't have to eat them one by one every day. I'll give you a package, you just need to eat one capsule every day. Just that kind of multivitamin, they have already prepared it for you in proportion, which is much more convenient. This ETF is similar to this multivitamin, it tracks the index, and when the index rises, it follows the corresponding increase index. For example, if the index falls by 10%, you will lose 10%. Of course, you can track bonds, currencies, or a certain industry, such as technology industry indices, pharmaceutical industry indices, and so on. If you are bullish on a certain sector but don't know which specific stock to choose, this ETF is like buying a package for you directly. Because it is really convenient and you don't need to study individual stocks, the threshold is relatively low. Therefore, in the more mature US market, even many retail investors will buy SP500 ETFs, which is similar to a national bond fund. Even if I am optimistic about the long-term development of this country, large investment banks and insurance companies will also allocate a large number of ETFs. Okay, what are the advantages of this ETF? Why did Buffett recommend it? There are two main differences between it and common active funds in the market. One is who manages the money, and the other is the fee rate. Active funds generally do not have a fund manager to choose stocks, so this ETF does not need to be selected. It completely follows the index and is passive, which means it can eliminate artificial irrational factors such as chasing gains and selling losses. The cost is also different. Proactive management fees are quite high, usually ranging from 1% to 20%, while ETFs do not require human decision-making, so they are generally lower. In the United States, the cost is even lower. For example, the largest SP500 index has a fee rate of only 0.04% to 0.09%, which is less than 0.1%. So you see it this way, there is still room for a reduction in fees, so it is very suitable for ordinary people to invest and also the most stable investment. That's all for this issue. If you have any questions, you can communicate in the comment section. If you are struggling with investment and financial management in your daily life, you can follow me with your fingers and give you different perspectives to plan your investment and financial management, making your life more comfortable. See you in the next issue.